Hey everyone, Michael here. In today's video, I'm going to give you guys 5 important indicators that you guys must add onto your charts. I'm going to help you set everything up, and on top of that, I'm going to teach you guys how to use them with traditional technical analysis. These are going to work for options, stocks, crypto, and Forex. So if you guys trade any of that, this is going to be a great help to your portfolio and help you grow and make consistent income. Now, before we get started, please make sure to hit that subscribe button to help out the channel. I am trying to grow this channel up to 100,000 subscribers, and I need your help. So because this is a deep dive into technical indicators here, I'm going to be showing you guys how to use this on a Bitcoin chart, aka cryptocurrency, and how to use this on a stock chart, and how to use this on a Forex chart as well, so you guys can trade those pairs. First of all, we're going to be starting off with Bitcoin. As I said, go over here to indicators, metrics, and strategies, and I want you guys to type in whole suite. Some of you guys may have known this one from some of the other videos I've been doing. Click on it once, buy in silico, about 9,000 likes or so. You're going to go over here to the settings tab, and I want you guys to change some stuff up. Some of you guys may have already done this, so you guys might actually be able to skip this part. You're going to go from length 55 to 60. Length multiplier is going to go up to 3. And you're going to go down to line thickness, and line thickness is actually going to be at 15. Then you're going to hit OK. Afterwards, you can see it's all perfectly set up, and now we have to add on indicator number 2. This one is the Donchian trend line, or trend ribbon, excuse me. So it's Donchian. It's going to be at the top of the community scripts after you type this in, and it's going to be the Donchian trend ribbon by Lonesome. Don't choose the technical one that just says doesn't have a community script next to it. Choose the one under community scripts. Click on this once, and you can see it's pretty big. Sometimes it may be smaller. I want you guys to go over here to settings, and I want you guys to change this from 20 to 30. Afterwards, I want you guys to shrink this all the way down because it's not that important to have it look that big, okay? Afterwards, we're going to be adding indicator number 3, and you guys are going to be going over here to add the super trend. I want to make sure you guys understand this is all one word. You can see it right here, super trend under community scripts by Kevon. Click on it once. If you guys, for some reason, accidentally type it as 2 words, it's actually not going to show up. So I want you guys to understand that, okay? Now, once we have this on here, go to super trend and go to settings. And I want you guys to change the ATR period from 10 to 50. And I want you guys to change the ATR multiplier from 3 to 5.1, okay? Hit OK. You can see it changes up just a little bit. And now we're going to be moving over to indicator number 4. This one, you guys just have to type in squeeze. And it's going to be the top one here. Squeeze momentum indicator by Lazy Bear. And you can see, voila, it pops up. Now, I do have a couple problems with this right now. And the first one is it's on the bottom of my screen. I want to click the move pan up button right here. And there it goes. It moved it up just one level. That way the Donchian trend ribbon is actually still at the bottom. There's no reason to have the trend ribbon in the middle at this point in time, okay? Now, I have a darker background, so I can't actually see everything that's going on right now. So we have to change stuff up just a little bit. I want you guys to go over here to the settings tab, and I want you guys to go over to style. You guys do not have to change anything with the Bollinger Bands, nothing with this, okay? Hit style. I want you guys to change the black to a red, or color 1 if you will. I choose a lighter red and I make the opacity up to 100%. And afterwards, I want you guys to go to color 2, which should be a grayish color. And I want you guys to turn that to like a lighter green. And I want you guys to turn that opacity again all the way up to 100%. This helps me see what's going on with a black background. If you guys have a wider background, you guys might not need to do this, but I still like to think of green as good, red as bad, or red as short, green as buy. Hopefully that makes sense to you guys. Now from here, I'm going to shrink this back down just a little bit more. We can open this up and move it down as needed throughout the course. So we have one more to add after this, and this one is a simple one. It's divergence for many indicators. So if you guys just type in divergence or just diver, you're going to see it again at the top of the community scripts. It's going to say divergence for many indicators V4. That is version 4 by Lonesome. I want you guys to click on this as well. So again, I like to make trading as easy and as simple as possible. So I'm going to change the colors here to be green for good and red for bad, or short if you will, okay? We're going to go over to settings. You're going to see inputs right here. You're not going to change anything in here. You guys don't have to do that right now if you don't want to. We'll come back to it in a couple seconds. But I want for positive regular divergence, I want you guys to change the color from yellow to green. Negative regular divergence, I want you guys to go to red. Positive hidden divergence, I want you guys to go to a lighter shade of green so it's not as powerful. And negative hidden divergence, I want it to be a lighter version of the red here. That way you guys can see, again, it's not as powerful of a move on the downward side. Going down here, you guys can keep all of this the same. You guys don't have to do anything else as far as this bottom section. I want you to move up here. These are all of the divergences that it's going to be checking for. I like to see all of these on, so everything that's on right now, I leave it on. I don't change anything about it. You can always check internal indicator. I don't need to do that for this one. And then you guys can move up, and here's one thing you can change. You're going to see divergence type. You can do regular, hidden, regular, and hidden. I would recommend moving this to regular and hidden. That way you guys just aren't seeing regular divergences, okay? Source for pivots, you can play around with this one, the closing price or the highs to lows. I tend to just go off of the closing price personally because that's where the end of the day is. But if you guys feel like you want to test this out, I would say go for it and see which one is more accurate. You just have to zoom out for a second, see which one's more accurate. You can see there's a bunch on here, but especially if you're going to be day trading using these tools, it'll be worth it to just test it out very fast, okay? After this, you guys are going to hit OK. Now, we have everything set up that we need to have. This is going to make our lives a lot easier. For this tutorial, as far as the divergence indicator is concerned, I'm leaving it on as a historical. I should probably have said that in the first place. You can see, if I go right down here, you can see show only last divergence. If I do that, it'll cut away all this other stuff, but because this is a lesson, you know, I don't want to just show you guys this. I want to show you historically what was going on, okay? So to turn that back on, just go to check off show only last divergence, and all of them will come back on, okay? So here's what you guys are looking to do step by step by step. The most important three that I think you guys would probably like to have and use more often than not are going to be these three. The Donchian ribbon on the bottom, which is green. The super trend right here, which is this longer one, right? Oh, excuse me, the Hootsuite, whole suite, excuse me, right here, this longer one. And then the super trend, which is this green line right up here, okay? Now, usually when all of these three are green, that's usually a very good buy signal, as you guys would know. So if you guys did this naked without any technical analysis and you guys are just looking at buy signals here or short signals, you guys would have bought in right here at the end of the day. You draw a little heart here. Let's do a little buy signal here. Right here at the end of the day, you would have bought right there. And if you held a few more days, you could have been walking away with maybe around, 21%. Maybe some people sold up here for 15%. You guys could have made a pretty decent profit just playing that. Let's go back in time a little bit more to find another one where everything was green or everything was red. Everything was red right here. And as you guys can see, if you guys did want to do some type of short position, that happened right here, actually on this in the close of day. So eventually you guys could have walked away with 7%, 19%, because everything was still red this entire time. Even up here as far as 32%, maybe you guys sold, really maybe when you broke out above the whole suite here. But most of you guys could have walked with a good amount of profit. Again, going back in time, you can see it doesn't hit all the time. It's not going all the time, right? It's not like we see these shifts every single day. It takes weeks for these shifts to really come into play. Again, over here, you could have bought right here. And, well, let me just move this up a little bit more. Arrow, there we go. Right up there at a high point. And you guys could see that you guys could have walked away with like 19%, maybe around 10%. But you guys could have still walked away with a profit. Again, a profit down here. So these are pretty consistent if you guys don't want to really do too much technical analysis. But you guys know me, this is a technical analysis channel. We follow the data. We're not here just to take the signals off, because we know, especially if you guys go out of the daily charts and you guys go to the 5 hour, the 6 hour, the 2 hour, the 1 hour, the 15 minute, it's not going to be as accurate. Let's go over here to possibly the 1 hour chart as far as Bitcoin's concerned. We have everything turning red right here. We didn't turn back green until over here, so you guys might have stopped out. But still, you guys might have had an opportunity to make about 2%. If you guys are trading with leverage, that could be okay. Now, over here, we had a buy at this point. That one still worked out a little bit more. This one over here, it might have hit in your stop loss, honestly, because we did come back up to that opening price. But if you guys were a little bit stronger and held, you guys could have made some money. So you can actually see on here, there are still some opportunities. Green here, a little bit of moves. But it's not going to be as accurate as that daily chart. The accuracy for the daily chart is why I love this, because I love to swing trade. Now, you guys You guys should have liked what you just saw just there, but this is only for Bitcoin. Remember that. You guys have to test this with Ethereum, all the other cryptocurrencies you're looking at, and we'll do it again when we look at some stocks here. Now, what you guys want to do afterwards is actually add technical analysis onto the charts. You guys are looking for breakouts, and you guys are looking for other opportunities to say, hey, look at this move, we could actually go a little bit higher. When you guys add these basic technical analysis tools onto your charts, it gives you even more confidence, so you guys feel more confident about buying and opening a position here. For this example, as far as Bitcoin's concerned, we had 2 breakouts happening over this period of time. So if I go back over here and I just add another shape, this is going to go back to this one. Let's go over here to the buy that was right here. This happened the day of a breakout. So we had a major breakout. We had all the signals say buy. That's a great buying opportunity. Sure, you could have traded on this breakout, but what did you see? Right here, as this was coming over, we were still in the red, green here, no buy signal, still sell. So maybe you were a little bit more hesitant, but you could have still felt very confident about buying because we also had a breakout, plus all of the signals were working out. Next, let's add on the divergence for many indicators. Well, before this breakout down here, we had 2 major systems saying, hey, we're having bullish divergence, let's see where it goes. This is a hidden bullish divergence. You can see the darker green one right here is actually positive divergence, bullish divergence that's not hidden, okay? Now, you had this one right here, going into the breakout. You guys could have bought in that breakout based off of those 2, plus it being a breakout, okay? There are tons of patterns that you guys will need to know over the years. Here's just a little bit of them, around 20. I know my head is blocking a few of them. My head's basically just blocking some rectangles. I don't know if I can swivel out of the way. No, I can't. But you guys will have to use these. And you can see most of the time it's just going to be some type of triangle or a head and shoulders or a pennant. Some form of triangle is really what you guys are going to be looking for. If you buy the breakout there and you see a positive signal ahead, you want to use that to reinforce your decision. That way you guys just aren't trading off for the breakout. You guys are trading off of a breakout plus bullish divergence plus all the other signals saying buy, buy, buy. That's how you properly use some of these indicators. And of course, after that, we can also add on the squeeze right here. And this is where I love the squeeze indicator. If we zoom in here a little bit more as far as Bitcoin's concerned, the way you use this is you're looking for the crossover for a reason to buy from red to green, and you're looking for the first time the check or this cross here goes from red to green. So you can see it's still red after it goes, the oscillator goes green. You're looking for the oscillator going green from red, and you're looking for the check mark here being green. So once that hits right here, that actually told you to buy a few days before this breakout. So breakout here, you could double down, you could scale out some here, you can see we officially broke out, you can re-enter a position, then trade it up a little bit higher. And again, when we talk about getting out of a position, we started to see some hidden bearish divergence right here. And why was that happening? Let me get rid of that very fast. Let me get rid of a lot of these other indicators just so I can show you guys what you guys should be able to see with the naked eye here. Well, guess what? There was a level of resistance here. Nothing too crazy about that, right? If it'll let me click on it. There we go. There we go. A level of resistance. Now, if you guys also knew how to use Fibonacci extensions, which I have another video on, you would also see there's a Fibonacci extension right at that level as well. And that could have been a little bit of a pain. But because you had all those other signals working for you, you should still feel confident enough to buy here, and use this as a scale up point, but you guys don't necessarily have to get out all the way. As far as how I like to trade, I'm usually scaling out at these resistance levels just in case we don't break out. And if we do break out, I try to catch onto them, but sometimes I'm just sleeping. Sometimes you're just not at your computer, so you can't make that trade. And by the time it happens, you're trying to play catch up with the next breakout because you weren't able to get this breakout up here. That is okay to do. And that's how you're going to be using this a lot with crypto. The big thing here is the Donchian trend ribbon, the whole suite, which is this one right here, and the super trend, which is this buy signal right there. If you guys have those, it's amazing, and you just have to pair it with proper technical analysis, usually just pattern breakouts, okay? Or if you guys are trading on the 15, you guys can be looking for candlestick patterns as well. But a little bit of extra reassurance is usually going to be coming along when we have these divergences that say, hey, this trend is ending. Look at all this green down here. Look at only the little bit of red right there. All that green, something is going to change here pretty soon, and you just have to wait for that signal, which technically is the breakout followed by the squeeze release followed by the Donchian ribbon, and the three holy trinity of indicators that we just talked about at the beginning, all saying buy, it's going to have a bigger move up. But you could always buy a little bit earlier based off of these indicators, which is why I love it so much. Remember, if you guys don't have the squeeze indicator on here, you guys will most likely buy right here. If you guys have the squeeze indicator on, you guys could have bought right here as the squeeze was actually ending. And again, you can buy here and still walk with a profit if it's going to stop right here at your first scale out level. But if you're buying down here on the first breakout, you're going to probably scale out some right here. Even if you buy right here, you're going to scale out some right there because that's a normal level of resistance. You're going to see sellers get in there just enough to kind of push the price down. That's okay. You're still going to be walking away with some really good profits. Now, after this, we're going to be moving over to a stock chart. We're going to do something very, very random for this stock chart. Let me see, because Bitcoin usually works out really well with all these indicators. Not everything works beautifully. What's something that's been pretty volatile? I would say Tesla's been pretty volatile, I would say. This is something that I think a lot of you guys can see. And there we go. And you can see as we move it over right here, all the indicators transferred over. But let's say that you guys have multiple pages, right? So sometimes when I'm using my wide monitors, this is just a normal monitor, I'll put 8 different charts on here, and you can see how it's only on this one and this one, Visa stock I was looking at earlier, but it's all these indicators are not on all these other charts, and they're all kind of just copies of the Bitcoin chart from before. Well, what you guys can do here is go back to that original chart, and you guys could just go over here, and at the end of all of these indicators, you'll see more. It's the 3 little dots. You can click more, and it'll say add this indicator to the entire layout. Go through and do this for each of them. Do it only once, don't add it multiple times. More, add this to indicator to the entire layout. And over here as well for the Donchian, add this indicator to the entire layout. We'll go back over here, and you can see now, if I just go to a random one where it was black before, everything has been added on easy peasy. That way you guys don't have to do this over and over and over again, because you guys know it can be very time consuming, all right? Now we're going to be using this for Tesla. You're going to see we have the super trend right here. It says buy. We have the whole suite going green as well. We have the squeeze indicator right here going green, and we have the Donchian trend also going green right here. And so this is where it can be a little bit more confusing, because this is Tesla. Tesla's had a very rocky ride. It was just kind of capitulating left and right over the past few months, and it's definitely gotten back up to some nice levels. But let's kind of just look at it in the past and see what exactly was happening during this little bit of a move. All right. So we had a massive bullish divergence going on right here. Nothing was saying buy. No buy over this one. No whole suite buy. No squeeze buy. What is this? Donchian trend ribbon buy. Excuse me. Nothing was saying buy. Only thing that was saying, hey, watch out, was the MACD, the Histo, the CCI, and the MOM all having bullish divergence. That's actually not enough to buy just on itself. But what was going on during this time? Again, we were hitting a big level of support and resistance right down here, and you could have taken the opportunity here to buy if you wanted to, most likely some type of entry position. You would have had to back test this just a little bit, and we're looking on the weekly chart now, so you are going to see some differences on the charts. But support, Tesla's been very good at holding these larger support levels here and trying to find out and trying to hold temporarily, just because so many people like to day trade this. But again, we found those support levels there from here to here, that zone, and that zone was actually hit perfectly. That's where you guys would have taken an opportunity to make some money here if you guys wanted to trade a major swing. And just so you guys know, you guys would have bought it around here. You guys would not have gotten the bottom. It's going to be very hard to get the bottom with stocks because there's so much news about the Fed these days, inflation, the economy, that you're just going to have to trust that you're buying in the zone and not necessarily just buying the extreme bottom. It's very, very hard to catch the bottom. Don't even try. Just catch the zone, have a stop loss, and trust that your pattern is going to work out for you, okay? Now, we go over here to where Bitcoin is. You can see the whole suite was actually red right here. The Donchian trend line was actually green, and the squeeze was actually green. So if you wanted to, again, looking at what we know, you would have had a basic trend line coming up like this. The buy signal was right on the 27th right here. So you would have gotten a buy signal right here, and it would have eventually kept on moving up. But you would have had to wait for some type of breakout, and which in this circumstance was right here. So you got that signal 2 days after breakout, and there it goes riding on. So you would have had a couple opportunities, but you wouldn't have been getting the best, I would say, right? So here, first opportunity, it does go down before moving up, and that is okay. You could have also been looking at Fibonacci retracements and things of that nature, Gann boxes. But the second one was right here after a breakout, and again, you would have to hold and trust that the squeeze is still releasing, right? Still releasing, the momentum is still going up. That's a good indicator. And on top of that, there's not really much resistance level above the 183 and the 200. Again, we're at 181, 182, and up here a little bit higher. That's what we're currently dealing with right now, but Tesla is actually breaking it above that today. But you wouldn't know what's happening today. All you would know is what's happening here or here at those specific times. So don't be afraid if it comes back down a little bit more and then bounces up. This is where you guys have to have a more responsible stop loss. So for this one, they're going to be a larger stop loss, and I think you guys understand. So for this example, let me squeeze this down a little bit more. Let's get back to the weekly chart. If we're going off of these zones, we're going to be going off of this top zone up here, bottom zone down here. So if you want to buy around this spot, right, there's a high over here above my head. There's a little bit of a low right here, depending on where you guys are looking at. Probably going off of this low right here, because this was another level of support. This was more of a level of resistance. So I'd probably say that one probably works best. But if you guys are going to be buying in this zone, or even, you know, just as we kind of test this out, because let's go back to the daily, you'll see how we were kind of getting choppy in here. You would have had a few different days. I would have probably said here, 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 as we were kind of testing out the zone. But your stop loss, if you guys bought, let's just say right here at the end of the day, would be $91, which means this stop loss would be around 18%. And the reason why this seems so extreme, because normally you guys are going to be having a 5% stop loss or 6%, is because Tesla itself has just been so volatile, and people aren't getting used to this idea that stocks that ran up a lot during this last bull market can definitely come down a lot too. We're still kind of in this old school mindset where stocks only move up a little bit per day and they only go down a little bit per day. But because the government managed to slosh so much money into the economy, you can see Tesla within a matter of weeks here. Let's go down here. 39 days dropped 49%. And that is billions, tens and tens of billions of dollars leaving in a short amount of time. We're not used to that. If you were to apply all of these to something that doesn't really have a volatile move, like maybe an Intel is usually a very, we're in crypto here. Intel is usually a very, very boring type of stock here. You can see weekly, it's had a little bit of a move, but normally this thing, you know, historically, if I get rid of the divergence, this thing really hasn't really done much since like the 90s, right? We've kind of been going sideways. Of course, the economy got hit pretty hard, all that good stuff, but you know, it's not as disastrous as I would say. So when we go over here and we check this out over the past few weeks, what do we have? A nice support level down here, a nice support level right here from here to here. That zone is an okay opportunity to buy, but your stop loss, if you're buying right here, isn't going to be like 18, 20%. It's going to be around here at about like 5%. And that's the really big difference. So if you guys want to trade something that has that shorter stop loss, I think it should help you guys kind of take away some of those losses, or make sure your losses aren't so extreme. You are not going to be making the same amount of profit, so you're going to be giving up some reward for that reduction in risk, so understand that. And I think that's why it's kind of important to show you guys how this works out with stocks. But again, look at that heavy divergence right there, heavy, 6 different things having a bearish divergence. The next day, we pop back down. You have the Donchian going red, the whole suite going green, so the overall trend is still kind of more sideways and up, right? But if you kind of zoom out a little bit more, let's get rid of the divergences. You guys may turn these off and on quite a bit here. But the whole suite here, I just got to take away the whole suite. Yeah, there you go. See, the super trend is still in a buy zone. So again, this is just showing us that we're in a sideways motion. A lot of these indicators have trouble in sideways motion, but if you want to trade the trend within a overall sideways motion, that's where I think just, hey, have a nice little buying zone, have a nice little selling zone, and your life is going to be a lot easier. Again, that's the top. You can see another level of resistance right here, and that's the way you guys have to play this. We're so used to these bull markets that it makes it very, very difficult. And again, again, I just want to show you guys this. You guys could always use Fibonacci extension tools and other stuff to add on here. So maybe you guys want to buy down here and you want to have a scale up point right here, and you guys want to eventually get all the way back up here and scale out. That's okay too. And as soon as you get that signal, you can really just get out of the whole position and just say, hey, I made my money. I made 17% in a matter of 22 days. That's great. That is absolutely fantastic. And so, you know, it doesn't matter what stock you're looking at, but you guys have to understand that depending on how volatile those stocks are, it really is going to change the game about how you guys approach it and the different types of risk you guys are going to really take on in order to decide, hey, I want to go to the next level. I want to risk it for the biscuit, so to speak. Or, hey, I want to play something really nice and safe like Intel, because at the same time you're hitting those resistance levels, you could also just short it back down and make money as it goes back down. Like right here, short it back down. Well, what else do we have here to work with? Let's go to Fibonacci retracement. Well, let's see. Do we have any types of support levels? Wow, it came right back here down to a retracement level. Who would have thought? If you guys don't like retracements, you guys can go off of different support levels. Right here we have one. Oh, look at it hit right there. You guys could have gone down a little bit more, or you guys might have said, hey, there's a support level from a while ago. Kind of, this one's not really the strongest, but you could have used it and you could have said, hey, I want to scale out midday, because these levels do come back midday when you guys are looking for exit positions. Last one we're going to be looking at is a random Forex combination here. I would say for Forex, I think most people just trade the pound to the US dollar or the euro to the US dollar. Flip a coin at this point, I guess euro. And let's add all these back on as well. Again, you can see some of these divergences and what it means. Forex is a little bit more different because, again, we're kind of in this time where we're raising interest rates. The world is kind of on edge. It's just not a pretty environment to be trading. And because of that, you're just seeing a lot of international economics kind of clashing with each other between different central banks trying to maneuver their currencies and help themselves with this massive inflation crisis that we're currently in, which makes it a little bit more of a volatile time, but definitely is fun. But this is where I think it's the hardest to use these types of indicators, okay? Especially if we take all these indicators off on the top of the screen here and we just kind of zoom out and see how wild this has been. The euro had pretty much crashed last year because America kept on raising our interest rates. It plummeted all the way back down to 95 cents, and now it's all the way back up to $1.07. But it had never been this low since all the way back over here since 2002. It's been a while. So these things are a little bit different, and of course you guys are going off of pips and not necessarily the actual price, but you guys are still going to be using these different types of levels to buy and sell instead of just trying to just buy it specifically off the signals, okay? I think crypto is the best opportunity if you guys want to buy solely off of the signals, but most of you guys will have to be looking at other types of technical analysis, okay? So, as far as all this is concerned, let's talk about some simple breakouts that we could have watched. So, technical analysis, we have a breakout right here. You can see we were in a nice downtrend. We broke out. Now, let's start adding our indicators back on here again. There we go. There we go. All right. So, as far as finding a bottom, this is what you guys would have been looking at. Wow, we have a level of support and we're touching that level of support. It managed to hold up the last time. And let's see, we're still squeezing down. That's a red sign. That's a red sign. We're still in sell. So overall, you would have only been buying off of this right here. The fact that we were at a support level, all right? And on top of that, we had the bullish divergence here saying we have an opportunity to go up. I'm going to zoom out a little bit more here very fast. Oops, a daisy. There we go. I'm going to zoom out a little bit more, hide the divergences though, hide everything. And I want to go back in time a little bit more just to see if there's anything else that was actually happening at this level that I would want to know about. Just because when you're doing the technical analysis, you guys are going to want to be as accurate as possible, and you guys are going to look for those historical levels. So there was this level of support right here way back in the year 2000. We held for a few weeks before, actually about a month and a half before actually falling down below it. So you guys may have had this. I would actually say you guys are probably not going to be using that too much just because it's so far back in time. I would say people are probably going to be going over here to the monthly charts. And let's just double check here because we have to double check to see what we would have been using at the time. Hindsight is 2020. You can't just be doing these videos off of hindsight. Otherwise, people are going to be really confused when everything is not as perfect as it seems, right? All right. Oh, look at that. A Fibonacci level down here as well. So that's it right there. See? And we were close enough to that where you could take the buying opportunity and then do the divergence. Now, that to me is still a risky trade because of how crazy the world was. But if you wanted to, you could have had a stop loss if you're buying around this level, probably at 0.973. You could have had a stop loss right down here about 0.94. That's going to be a little bit of a larger one here. So let's just go over here. That's about a 3-4% stop loss. Not a lot to you guys, but Forex is pretty much all leverage, so it would have been a little bit more for you guys. So if you guys put too much money in it, you guys could have been stopped out, or you guys could have had a margin call. This is usually why I like to do these longer swings where I put a little bit of money in there. I don't go too crazy with the leverage, and I just like to play out the momentum shift that I think is going to be coming, okay? That's how you would have traded it there. And of course, you can see there's a breakout that occurs. That shows the trend has changing from a downtrend to more of a sideways trend or an upwards trend. And after that, let's go back over here. Again, let's go back over here. A breakout. See, the breakout happened, but what happened? It ended up coming back down, and that's what happens a lot in Forex. So if you guys ignored this hidden divergence here, that was a big warning sign, you know, you could have still been having some pain right here. But if you guys managed to buy here for a longer term trade, guess what? You could have actually weathered this storm a little bit better because your stop loss is still down here. Now, should you have bought in right here? A breakout occurred. There was the Donchian trend ribbon line had just turned green. The squeeze, we were still being squeezed here, which means no squeeze release, which says maybe not. Let's go over here though and add some other stuff. Let's go to the super trend. Super trend was still a no, and the whole suite was still a no on that time. But what happened the next time we actually managed to break out? Donchian, green, whole suite, green, and the super trend all green. And what happened? You buy here, and whoa, it's looking a little bit better. So these help you kind of stay away from some of those traps that occur. And guys, I've been trading for 5 years full time, and I still get trapped by stuff, but these type of tools can help you not get trapped as much. Sometimes there's just big news events. Sometimes there's a big bank meeting and they just don't, they change what everybody thinks, like the Japanese bank. It happens, you're gonna lose some, but these will help you make consistent profits if you guys are willing to just trust the system and understand that just because there's a breakout doesn't mean you automatically have to buy. Although a breakout is a very good thing, it's not 100% accurate, if that makes sense. Just like none of these indicators alone are 100% accurate or altogether are 100% accurate. So if you wanted to buy this, again, we'd go over here. Actually, let me put this crossover here so I can see exactly where I need to post it. Everything is green right here. You could have bought, and boom, after that, look at that beautiful movement. And of course, if you guys, this is a retracement level here, but if you guys wanted to see, hey, maybe where can I scale out? You guys could have been looking for resistance levels, like here's a big resistance level right there. You can see how it matched up there. Or it could be going for Fibonacci extension levels here as well. And you can see right now, we had some resistance up here, some resistance right there, some resistance right there, some resistance all throughout here, resistance, resistance, and we managed to break out a little bit higher. So, you know, you could use these a lot to help you out, but just make sure you can scale out some there, you can scale out some there, you can scale out some here, and you can scale out some there. And of every single time you've locked in profits, which you can therefore use to grow your portfolio even more. That's the real key to trading, is just being happy to continue to grow your portfolio. As long as your portfolio is growing, you're fine. If you guys are making 5% a week, you guys are fine. I know you guys want more, but you're fine at 5% because it's going to continue to grow and grow and grow. And there are going to be some weeks where you lose 10%, some weeks where you make 50% because you've had a really good trade and the momentum is just amazing. But that's how you guys are going to be looking at a lot of these indicators. And if you wanted to add something else, you can see the squeeze has started to happen with the momentum. That means you should be looking a little bit more profitable over the next few days as the squeeze really starts to release. And what happened? We started to continue to gear up. Now, we did fall, but we started to gear up and gear up. And this is one of those opportunities where the squeeze indicator actually came up after everything else did. So I hope you guys enjoyed this video using this for Forex, crypto, and stocks. You're going to be using this in different ways, but I hope you guys will have an opportunity to test this out with swing trades. And before you guys actually use your own money on these strategies that I've kind of taught you guys about today, I would recommend that you guys actually do this with paper trading, whether on TradingView, whether on TD Ameritrade, or whatever platform you guys have. Test it out before you go. Just don't take somebody's random strategies off of the internet and implement them with your own money. Take your time and practice them using paper trading techniques. And then once you feel more comfortable and you guys have a track record of success, you guys can actually do your own trades based off of some of these and make some consistent profits. But make sure to practice them for yourselves first, okay? Thanks everybody, and have a great rest of your day.